What's up, YouTube? Welcome back to the channel. All right, so this is video 3. The first two videos, video 1 was how to read candlesticks. Video 2 was how to identify trends. So this third video is it's going to be how to identify the reversal of a trend, right? So the trend is our friend when we're trading. We always want to trade with the trend. And the reason behind that is because that's where the big money is. And what I mean by big money is there's two types of trading categories. There's retail traders and then there's institutional traders. Retail traders are people like you and me. We're putting a couple hundred into the market, 50 bucks, a couple thousand, whatever the case may be. The institutional traders are like your big banks and Wall Street people, the people that are actually moving the market, putting millions and millions and millions and millions of dollars on the line every day. So these candlesticks, our money isn't doing that. Our $50, our $100, our $1,000 isn't doing that. These candlesticks are being moved by Wall Street and the big institutions and the corporations putting in millions of dollars on this market. So the trend is important because we always want to trade with the trend. The trend is the institutions. They're moving the market. So if it's an uptrend, we want to be in an uptrend. We want to be buying. If the market is going down, if the institutions are selling the market down, we want to sell with it. It's just like getting in the river and swimming downstream. That's going to be a lot easier than swimming upstream. All right. So with that being said, let's hop on the charts. All right. So back on the charts, right? We already established that the market moves in three ways: up, down, and consolidation. Right. So we want to be with the trend. The trend is our friend. So how do we figure out when the trend is ending and reversing so we can stay in alignment? So the first example is going to be an uptrend reversal. What is an uptrend? From last video, it's a series of higher highs with higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. With an uptrend, okay, so right here, we put in a high and a higher low. Higher high right here. The higher low is 7 times, 8 times, 9 times out of 10, it's always going to be pretty much retesting the level that it broke. So this was a high, this was a higher low, was a higher high right here. We then come down and test in this zone that we broke out of to make sure that the buyers are still there to push up price. We test in the zone, we push up, we make another higher high. Our higher low is going to come back down and test this zone before pushing up and making a higher high. So whenever we're in an uptrend, we are always looking for price to make those high highs. That's what price wants to do. So how do we figure out when the trend is ending or the trend is reversing? It just think about it for a second. Higher highs and higher lows. We don't want to see any new lows being put in, any new lower lows. We only want to see higher highs. So to identify when the trend is ending, you're going to mark up your most recent low. That is your most recent low. Okay? So we just broke this level right here, right? We just broke this level. Oh, that's the wrong thing. We just broke this level. And what did I just say? Well, if you break a level, price is going to come back and usually test this level right in here somewhere to make that higher low and keep going. So this is how you identify if price is reversing. It's okay for it to get to this level, but if it gets to this low that was put in, the higher low, and we break past that, we are no longer in the uptrend. We're in the downtrend. Why? Because we put in a new lower low. When you're in an uptrend, you should not be putting in any new lows, only higher lows, right? So when this happens, that is a signal that you're in a downtrend. The confirmation that you're in a downtrend is if once we put this new low in, we don't break back above this. We don't break back above this level that we came back to retest. We come up, and just like a higher high, whenever you break a level, it wants to retest it. We come back and we test this low level right off of here, and we shoot right back down. We have now went from an uptrend, we have went from a clear uptrend, broke a low, to being in a downtrend. All right, so I don't know if I explained that good. I tried to, keep it real simple, but I want to go to the charts and see if I can find an example. I marked up one right here that we can review, right? So just like the example, uptrend, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high. We should come test this area to make a higher low before going to make a higher high. didn't. We went to this low and broke it and could not get back above it. So as you can see right here, we are in an uptrend on this section right here. We put in a high, higher low, higher high, higher low, testing the area that it just came out of right here. Higher high, higher low. So we're on this higher high, right? Or I'm sorry, we just made a higher low. We are expecting price to continue the uptrend. After this higher low, we want to come up and break across this level right here and stay up there. It looks like we broke across this level, but we didn't. Why? Because it wasn't a bullish candle close. It was a bearish candle close. It's a red candle close. Okay, so that's an indication right there. We failed to make a new high after making a higher low. So to me, that signals to me that I need to go look at my last higher low, which is right here. Right. So I'll draw this back out. High, low, higher high, higher low, higher high, because it's above that price, then a higher low. Right. We're in a clear uptrend. Price went up, did not hold, did not break this high right here, did not break this high. And we came down and we broke past the most recent low. In an uptrend, we don't want to do that. We want to keep going up. We broke past the most recent low, made a new low, tried to retest this level up here. We did not make it. This is a lower high, lower low, lower high, lower low, lower high, lower low. As you can see, we went from a uptrend to a downtrend. That's how you spot a reversal, and it's the same way. It's the same way for spotting a downtrend reversal. All right, so spotting a reversal for a downtrend is pretty much the same as you do for an uptrend, right? What's a downtrend? We're putting in lows, lower highs, lower low, a lower high, lower low, lower high, lower low. Just like the uptrend, whenever we break out of one of these lows, which we broke out of this low right here, we're gonna come back in and retest, put in a lower high and go lower, lower high and then go lower. That's what we want to see, right? So let me just say this. With the highs, let me go back to the example. When you're in an uptrend, your lows, your higher lows, are what protect you from going in a downtrend. This is a higher low. This protects you from going in a downtrend. If this zone is broken and the candles close beneath that zone and don't go back above it, you are now in a downtrend, right? That's what protects you in an uptrend. So the opposite can be said for downtrends. Your highs are what protect you. Your highs will protect you. These are your highs. So in a downtrend, if we're supposed to be putting in lower lows and lower highs, but we come in off of this lower low right here, shoot up past this level, and put in new highs, right? We broke this level. We broke this level, come back, retest in here, and come back up. What did we just do? We just switched to an uptrend because we put in a high, a higher low, and a higher high. We went from lower lows, lower high, lower low, lower high, lower low, to a high, higher low, higher high. So in a downtrend, your highs are what protect you, and in an uptrend, your lows are what protect you. So let's go back over here, and we can really use this same example. Let me get this off of here. So we can tell right here, this is a clear downtrend. Put the trend line right here. We are down. We are down. In a downtrend, what do you make? Low, lower high. This is a lower high because it's a bullish closing candle. Lower low, lower high. Lower low, lower high, right? We break out of there, we come back and retest it. Lower low. So what we should do, we're expecting price to come back up. Let me mark this out. We're expecting price to come back up and retest this lower high zone because that's what happens. When it breaks out of a zone, it needs to go back up and retest it. This is what we want to see happen. Come back in the zone and fall back down, right? That's what we want to see happen. However, just like I told you, your lower highs are what protect you in the downtrend. We come up, test this level, but we don't sink back down. We get back above that level and close. So if you just look at what I just drew out, you can see that we have a low here. We make a new high. We make a higher low, and we make a higher high. What does that tell you? You have switched trends, and you can see it. It just keeps going. we have switched from a downtrend to an uptrend. Over here, we switch from an uptrend to a downtrend. And it's just based off of the highs and the lows within that structure. I'm gonna say it again. I've said it a couple times in this video, but I want you to understand it so you can see it for yourself. In a uptrend, your higher lows are what protect you and determine if you are reversing that trend. If your higher lows are being broken, especially your most recent higher low is being broken on the uptrend, you need to be like, okay, is this reversing or is this just a small pullback? You can tell if it reverses by if it closes below your most recent higher low and doesn't get back above it. Same with the downtrend. Your lower highs, not your lower lows, your lower highs are what protect you from your reversals. So if you notice that your lower highs are being taken out, you need to ask yourself, is this a pullback or is this a pure reversal? So that's pretty much the go-to way of identifying trend reversals, right? And like I said, why is that important? Because big money, they decide the trend, they decide which way the market is going to go for the day. The trend is your friend, and we always want to trade with the trend every single time. So that's it for this video. I'm gonna get this edited, get it pushed out for you guys, and I'll see you on the next one.